Hello, crypto traders. This is Steffens speaking. Today, this video is going to be about the recent move in Bitcoin and some explaining about it and just why things have occurred from what they've occurred and what I think is the potential for the future. So the first thing that I want to talk about to reference a previous video that we talked about with trend is, time frames with trend. So if we look on higher time frames, just go ahead and get right started into the topic. We can see that from November 21, so November 8th, all the way down to November 22, we had a 1-year downtrend, right? So now that's confirmed that the higher time frame is in a downtrend. So since then, end of November till February, so about 3 months, we've been in a little uptrend. All right, so when we look at it from that perspective, we still need to understand that in the macro trend, we are in a downtrend. So when we look at the weekly swing high that created this the lowest point here, that level right there is of big importance. So we're going to go ahead and take the top of the two candles and put that over to the right, and you can see that that is where we rejected on the, I guess you could say, the medium time frame upswing in the macro downtrending market. So I wanted to start with that. Now let's go ahead and look at the last 3 months, and come down to a lower time frame, the daily. So we can see here down at the daily that this was a long area order block where longs were taken, and we come all the way up. The first area really of any sell pressure was at this previous high point, which is a standard take profit range. And then from here we came up, actually had a nice little retest, previous resistance turned support, and we came up again. So what I want to talk about in this video is liquidity to liquidity moves and what moves the market. So who moves the market is big money, right? The market makers. And it's not just one person is big money. A lot of times, best way I can describe it is that people will only show up to a fight when the fight happens, or when a feeding frenzy occurs. That's when, the big money will show up. So what I'm saying is when we look at it from this perspective, like if we look at just from here, from February 23rd, or February 2nd, I mean, at this high point. So how would orders be established? So you can see that here there was some short orders, right? And then, there obviously major long orders were here, and maybe even a few more taken here. So let's establish these as the long order blocks. So a liquidity to liquidity move, big money, they want to target the stops, and they want to target the liquidations. A lot of time, retail money, a lot of times that is in similar areas. So the way that they layer their orders is they'll do orders such as this. Layer their orders in. And once they get their short orders filled, then they'll dump it. And how do they dump it is the question. Well, they close their long orders. By closing their long orders in the books, that is seen as a short order, right? So that is what causes this move. And then also, if we look at just this little structure swing right here, we can see, before we do that, I just do want to mention that big money will always be hedged. They will be playing both directions at all times. So when we can see like the shorts happening here, now what I want to do is I want to focus in on this move. So even though this is a higher high, this higher high is insignificant because of the fact that, it just came right above. It's basically just to target this liquidity, fill that liquidity, stop out the shorters here, and then once that liquidity is grabbed, where is the next liquidity? Well, the next liquidity is these two long order blocks, right? And a lot of times in these situations, people will even long here, right? Even whenever there was a big impulse. and people will long here. So first, let's look at this little structure right here on the 4-hour. So when we look at this structure here, we see that this is like the origin of the swing. And even if we come down to the 1 hour, I believe you can see it a little bit better. But we did have a little bit of a swing here before like the point of failure up here. So when you have an origin, swing, point of failure move, a lot of times price wants to make an attempt back at origin, and that's kind of what we saw here. But if we look at the original move, this was, the origin that created this. So we even, came down, tested this origin, lower time frame, and came back and tested a little bit of a higher time frame origin and swung it. So now that we've tested the long liquidity, where would the next step be? To test the short liquidity. So coming in and now let's delete everything and now kind of look at what do we think might happen in the future. Where's the short liquidity at? Here, here, and here, right? So that we swung this, now we're seeing a nice like impulse reaction because we've now tested, grabbed all that long liquidity. Now it's very likely that we're going to come and test this short liquidity. Now there isn't, an exact time frame on this, but I would say probability is above 50% that these two are the next targets. Now, if we come back into a higher time frame, since this is the second swing here, this is where I would be looking for price to come to, but that does not mean that we are in a long trend. Even if we come up and test this, this is actually the area to potentially look for shorts. And why is that? Well, like we talked about at the beginning of the video, we are still in a macro downtrend. So trading against the macro downtrend, we need to break and achieve more levels. So locally, what we are seeing is now we're going to see an uptrend move, and price doesn't just move in one direction. So if we wanted to look at like a path, it would be, lower time frame test, maybe a swing up to here and then come down and test that, test this liquidity, maybe some profit taken here, all right? And then till we test this range up here at 23, 24K. Because now now the big money is there to target the shorts. And that is kind of how it works, right? You go both directions. One thing to keep in mind is shorting is very much more so impulsive than longing, and that's for a couple reasons. One, majority of the market is just more willing to long. If you ask a lot of people and you look in their portfolio, what do they normally trade? They normally do longs. They don't short. So it's, and then a lot of times people don't follow basic fundamentals. They don't have invalidation stop losses. They double down, and then that's when you get these liquidation licks, right? And stop loss licks. But what causes these breakdowns is just taking profits on the longs as well as entries of shorts, right? So that's what you see here, and that's just stop losses and some liquidations and things of that nature. So yeah, this is what I see for the future on Bitcoin as a high probability. And obviously things can change, but this is just looking at it from a standard structure, and you see this happen all the time, where you have like, and I'll draw this up here, where we have price coming down, right, in our macro downtrend, and then we have a retest of the upside, and then what happens is you get little structures like this, where we have this higher high, but then we swing the low here, and then we retest this level, and then we come down and we come back and test the origin of the entire move. So it's a very standard structure. You can see it on multiple time frames, lower time frames, higher time frames. So this is what I am seeing here as a likely possibility. And if we look at the structure, you can see the similarities between this. So we came down, came up, came down, retested, came up all the way to here, which is here, came down, made a higher high, now made a lower low of the structure, and now we would want to see the retest of highs. To grab that short liquidity, and then, some long liquidity will be established here, and then the next step will be to attack the long liquidity. Now, one way to invalidate this coming back down, so right now, this is, we have to wait to see the information, is if we, break this high. And that's why this level and this trade here, and this is maybe weeks away, maybe even only a few days away. I would probably say it's, 6 weeks away if I had to take a guess. And the reason why this is a really good trade is you have a very defined stop, right? Because if this is going to play out like this, we don't break this structure. So here's a really good risk to reward on shorts. You're also trading with the major trend, so probability is on your side on that as well. But yeah, for the future here, we're looking at long opportunities. So now let's go ahead and look at the lower time frames and see what's just happened recently in the last 24, 48 hours. So you can see that we had a nice impulse move down. We swung the lows 3 times, 1, 2, 3. Had a nice little impulse where we gained the high that created the low. Came down, did a nice little retest, and then we had an upside move. So what we want to see is we want to see this hold here, the high range of that. And it looks like we already tested it, so I don't see us coming all the way down to that. But yeah, something of this magnitude I think is likely. Going sideways a little bit low and then eventually testing somewhere around there, like this previous resistance as a support. And then you'd have a nice risk to reward trade here, because this would pretty much be invalidating the long. And then the upside move. So I hope this helps with any understanding of the current market structure. Any comments, questions, concerns, please comment those. If you like the video, please press the like button and subscribe. If you are interested and you're not already part of the crypto traders community, the Discord link is in the bio, so you can get alerts and live lessons and things of that nature at cryptotraders.com. Thank you guys for watching, and I hope this helps you stay profitable.